You're listening to the Maven Approach Podcast, the show where we interview passive real estate investors from every walk of life who share their experiences in passive real estate investing while still working their full-time job. If you're someone who's wanting to start or grow your own cash-flowing portfolio while continuing to do what you love, you're in the right place. Here's your host, Chad Fowers.
All right. Well, we want to welcome Ray Sweger to the podcast today. Thank you so much, Ray, for joining us, and want to just say hello and welcome you on.
Yeah, thanks. Glad to be here, Chad.
Yeah, no problem. It's kind of funny how you meet people. We actually met through a mutual connection that we know through the banking world, Quinn, and we were able to connect through him. And now we're here on this show and hopefully able to discuss some real estate and your experience. And I'm really looking forward to it. After talking to Quinn, it sounds like you have a lot of experience there, and happy to dive into it. So Ray, if you want to just give the audience a little bit of an introduction on your background as far as your career, how you got started, kind of what your careers looked like over the years.
Yeah, sure. So I have a degree in finance, a minor in law, and then an MBA. And I started out, I wanted to be a mutual fund manager. So to manage stock portfolios for people. And I was a financial advisor for a while before going back to school, and kind of got a job in banking, in investment banking, actually doing valuation work and some limited consulting work, and just kind of fell into banking by accident. And 2008 hit and the markets collapsed, and I was really happy to be in commercial banking, and so have been in banking since 2006. And today I'm a relationship manager for commercial corporate relationships. So generally companies that have, $100 million revenue plus or minus, and I help them manage their payments products to, set up a credit card portal on their website to take payments and to get their loans for the building or the equipment they need to expand their business, just manage those relationships for businesses.
Wow. Okay. That's a lot to unpack. So you started in the financial world, you thought about becoming a fund manager that manages mutual funds, kind of dealing with the stock market. Would you say that what you're doing now is along the same lines, or is that totally different than what you anticipated you were going to start doing?
Yeah, good question, Chad. I would say it's very different, but to kind of meet that childhood ambition of, managing investments, on a very micro scale, I guess I kind of manage my own, right? And so for a day job, I manage risk and provide debt capital. And, in the evening and on weekends, I look at, real estate properties for, investment opportunity. I, look at stock and ETF type of funds and, kind of go back and forth a little bit on that whole investment management side. What do I like better? Do I like actually holding real property, owning, a townhouse and renting it out? Or am I better served just by having a very liquid investment in a publicly traded REIT, or I think it's IYR, it's a ETF for real estate investment trusts. And, the leverage and the control that you can get on the individual properties, nothing else has come close to the overall rate of return that I've gotten from directly owning investment properties. And so it turns out that's been a real winner, and why I wanted to come on here and talk about, what I've done and how that's worked.
That's awesome. That's exactly why I'm excited for you to be here, because that's a big discussion that the investment world has, right? What to invest in, what's the safest asset, what's the most profitable return. There's a lot of different aspects that go into it, but like you, I see real estate as the one that you can control the most, right? You can manage the most. Everything else is kind of out of your control. And maybe you've seen more than I've seen in the banking world and the investment world on that side of mutual funds and stocks. But it seems like there's just not a lot of there's not a big element of control with those assets.
Well, there's some big trade-offs, right? There's liquidity is far and away the biggest trade-off. I can't just go buy a townhouse and, oh man, I'd really like to have my money. I took a small gain. I'd like to take that gain and do something else. It's a process and it's very expensive to do, but I can get a mortgage on it. And, the way I look at it is, at this point, I have 5 mortgages, my home and 4 others, and my tenants are kind enough to pay all of them. So in a way, I'm mortgage free. They rents are great enough to pay their mortgages and my mortgage. And stock, to get that out of stocks, it would take an incredible amount of capital to get dividends at that level. And so it's that leveraged return has been just phenomenal.
Yeah, I think that there is an option to leverage different types of investments within the stock market, if I'm not mistaken. But the risk obviously is not equivalent to the risk of leveraging something like real estate. Obviously, being able to have a tenant in there that's paying your mortgage is different than having a company that is based on news and different things that come out to determine its value, right? And that's what I've seen. I've done a little bit of day trading, which I'm not saying that that's along the lines of what you're doing, but day trading, I've used leverage in the stock market, and it always seems to come back and bite me really hard. But every time I talk to people about leverage in real estate, it's something that everyone is excited about, everyone takes advantage of to the maximum that they can, so that they can benefit from the benefits that come with owning real estate with leverage. So that's interesting. So Ray, really quick, tell me, you mentioned that you have 5 mortgages. Was it 5?
Yeah. So 4 townhomes. We own 4 townhomes that are rented, and then just our home. So yeah, 5 total mortgages.
Awesome. How long have you owned your rentals?
So the first one we bought in 2014. And then we bought one a year for 4 years. The only reason we stopped was the performance was been so much better in the real estate that it just felt a little too hot. And then of course the prices just continued to accelerate even faster, right? But it just seemed, the first one we bought was for $164,000, and then we bought the next one for a little over 200, and the last one was 250, 255, right? And it was like, oh man, I'd really like them to drop back down into the low 200s, and now those townhomes are on average right around 400 each. And so waited for a little bit of a dip and kind of park some money in our own home by finishing our basement and just spending some money. But locked and loaded to buy a dip. Last year I was too scared, right? When COVID hit, I was really nervous. I went out and gave all my tenants a discount because most of the tenants are service industry, restaurants and retail type employment. And so I was really scared. They're all of a sudden getting laid off, and there's unemployment, but that's a pay cut for most people. And so I was really scared, gave everybody a discount, and and in hindsight, we came through that much better than I had feared we were going to. And I wish I would have bought, but now it again feels just a little rich, to pay 400 or over 400 for a townhouse, and would love to see that come down temporarily and pick something up. But I've been on a little bit of a hold pattern for about 2.5 or 3 years.
Yeah, that's really interesting. We're in the same market, and at the 200 to $250,000 price range is non-existent anymore. You can't even buy a
Right.
scrubber for that amount. With fixing and flipping homes, we actually just picked up a couple of homes, and they were in the $300,000 to $500,000 range. Some beating the $500,000 price range, and it's just insane. So I think that makes sense to kind of use um, some knowledge of the market to maybe park some money and wait for some time there. With investing, you said you gotten started in real estate in 2014. What made you decide that you wanted to do it at that time?
Are you looking to grow your net worth through a cash flowing real estate portfolio, but lack the time or know how to get started? Maven Capital Group is your solution. We're partnering today with passive investors to grow their wealth through multifamily real estate. If you're interested in learning more about us and our process, head on over to mavencapitalgroup.co/free training. That's mavencapitalgroup.co/free training.
I mean, I would have loved to do it sooner, but it takes a little time, and I've done it the old-fashioned way, where you put a down payment and take a conforming traditional loan. And so for investment properties, my experience has been you have to put 25% down. Otherwise, you're paying, a real premium interest rate, premium closing costs, and it just takes away the return and the cash flow. And so I just frankly didn't have the money prior to that. But what got me interested, my grandparents were slumlords growing up. They own a bunch of mobile homes and just really low end, cheap housing. And so as a kid, I was always helping to fix stuff up, whether it's painting a metal roof on top of a mobile home, or someone hasn't really done any yard work for a few years, and so my grandparents would have me go in with weed whacker and chainsaw and just clean up a property and get it ready for someone else to move in. So worked around their properties, and they retired at my grandfather was 50 years old when they retired, and they lived an amazing retirement life. And as their grandkid, I was able to go on vacation, and we'd play golf once a week in the summer. We go to movie, there's kind of matinee day, movie day, so we had movie day and golf day, and just a ton of fun and vacations and stuff, and it was all powered by their rent checks. And they were very open and shared with me, what they were doing and how, and how much it cost, how much they receive. And so I knew from a kid that I wanted to do that too. And then, in the Salt Lake market, you got to save up. It just takes some time, unless you inherit a ton of money or make an incredible amount of money. But it just took a few years to be able to save up that down payment to be able to make that first investment. And then as the real estate market kind of picked up from 2014, 2015, 2016, 2017, I increased my home equity line on my house, and I used that as a down payment. And then I used, bonus dollars as down payment. And so combination of bonuses and just drawing against my home equity line on the value increase of my own home, I was able to make the other down payments and get a few properties. And if real estate wouldn't have appreciated so quickly, we were on a trajectory, and I would have been totally bought roughly one a year, indefinitely. But I've just been sitting out a little bit. But yeah, I knew from a kid that, this is how you create income so that you can not go to work anymore and just travel and play golf and take your grandkids to the movies. And so, you just gotta get that ball rolling, right? And just give it some time, because you don't feel it for a few years, but down the road, eventually, when that ball gains momentum, and right now our first townhouse that we bought, the mortgage is down to like $90,000.
Wow.
And, we could just pay that off and have one, mortgage free. And I'd do that, but the interest rate's so good that I'd rather just sit on the cash, right? And be prepared to pick something else up. But, you can start paying those mortgages off, and then you have that just total free cash flow. And, I hope to quit working in the not too distant future, so that you can enjoy yourself more.
Right. I'm curious your philosophy. Everyone has a different philosophy as far as leveraging their home equity to purchase real estate. I talked to a lot of different people that their main goal, you've got two different sides. You've got the person that their main goal is to pay off their house and never have a house payment. And then you have the group that leverages their equity to purchase more real estate. Just curious what your mindset is and how you develop that mindset to decide to leverage your home equity to purchase more real estate instead of paying down the mortgage.
Yeah, and Chad, it is a little scary, and it's really appealing to be debt free. However, I view myself as debt free in a way, because like I mentioned earlier, my tenants pay their mortgage and mine. So I use that leverage in a way that the total rent income covers all debt payments going out. And so it is a much faster way, by taking on more debt, right, and getting a higher yielding asset with that debt than the cost of the debt. I effectively got rid of my mortgage payment way earlier than I would have if I were just plowing my money into paying my mortgage to zero. But the other thing is, in part of why I got comfortable, and I'm still very comfortable with using leverage on real estate, it is a fundamental belief I have in inflation. I believe that the government will continue to print money in deficit spending for our foreseeable future, which causes inflation, and loans don't inflate. In fact, your mortgage goes down. You have to pay your balance down. And even if it's on an equity line, right, the amount that you borrow, as long as you make those interest payments, and let's just say you're using all home equity, right? You go and you get a $400,000 home equity line against your home, and you go and you buy a $400,000 townhouse.
Yeah.
And if your interest expense is, let's say, 3%, and your rent rate is 7%, you're pocketing the difference. And over time, inflation will you can have a dip in real estate values, but over an extended period of time, that rent rate will inflate, the value of the property will inflate, but your debt won't. And so it to me, taking that leverage for a not inflating liability and buying an inflating or appreciating asset over time, it just simply creates equity. It creates wealth over time. Even if it dips, right? It can go down, but you buy at the top and 10 years later, it'll be higher, period. It always happens. And so the real risk is having a secure cash flow, right? And so another reason I'm fortunate to be in banking, it's a very, very stable industry. And in fact, when the economy is hurting, my job is even more valuable because I'm managing and working through those financial economic challenges with my portfolio of clients. And so my job becomes more stable in an unstable environment. If you have a job that is in the service industry, and if there's some sort of a disruption, those luxury or service type positions are the first to be impacted, maybe you wouldn't be as comfortable, and maybe you should take advantage of, or let's just say it a different way. If you have a highly cyclical job, right, where you have
Right.
big income in up cycles and little or no cash flow and income in down cycles, it probably makes a lot of sense to take excess while you have excess and either pay down debt or invest, but not to take debt at the peak of your excess. So I think that the question might be better answered from a, how stable is your base cash flow, and how confident are you in your base cash flow? If the answer is very stable, very confident, that's how I've viewed, my job, and I've been fortunate to have that super stable base cash flow. Then you go to question two: am I buying something that's going to make more than it costs? And that answer in my mind is always yes. But you still want to maximize it, which is why I've been on the sidelines, in this super hot market. So
yeah. I see two debt philosophies, right? There's the lump sum principal, debt, and the monthly payment debt, right? And you touched on that. And I think a lot of people, they fixate on that lump sum when in reality their debt is eliminated if their income exceeds their expense on a monthly basis over a 30-year term. That's basically, like you said, eliminating your debt a lot faster than you would 30 years down the road. I love that. That's very fascinating. The other thing that I came to my mind as you were speaking is the thought that, so for me personally, I just bought a house here in Utah, and the thought that if I needed to, that I could actually keep my house and rent it out to somebody if, in say, in a cyclical cycle, if there was a downturn in employment or income, you can actually take that asset that you own with the bank and you can rent it out. Maybe you're not eliminating completely your liability on the mortgage, but you're at least reducing it by that income amount that you're able to rent it out for. Because again, in a down cycle, most people go from owning real estate to probably renting real estate. I don't know if that's factual, but in my mind, that's how I see it, right? If you're going to lose your house, you're going to end up renting. And so there's going to be a demand for that rent in a down cyclical cycle in the real estate that's going to be able to at least provide you some options with real estate that you own as you go forward. I'm not sure if you think the same way or not, but that's how I think of it. And it kind of gives you that platform and that base to kind of work off of, if that makes sense.
Yeah, and I think that's where there's a kind of a sweet spot in owning individual properties to rent. You want to buy something that's nice enough that you're not intimidated to go into the neighborhood to check on it and fix things up, but also it's a step down from someone who might have had a high income in a high cycle and in a reduced income, but not all the way broke, right? And then you will see kind of that supply demand shift where there's more demand for that townhouse instead of that upper end single family house. But if you're upper end single family, you're not going to get that. People can't downgrade into that house. That's a much tougher market. So all of our investment properties are townhomes, 3-bed, 3-bath, nice neighborhoods, all in nice neighborhoods near my house. But if someone in this market, an $800,000 single family house has to downgrade, they're going to downgrade into one of those $400,000 townhouses.
Yes.
And they're not going to stay, because once they get their job, their income level back, they're going to want to get back into the $800,000 house. But they can manage, and it's a nice enough area that they can keep their kids in a good school district and things like that. And knock on wood, even in 2020, we had one tenant move out, and I didn't even get it posted all the way. Sent like 2 text messages. Oh, I know someone. Hold on, before you post it, will you talk to this person? Sure. One conversation, sight unseen. It's like, yes, I'd love to be there. That's a great spot. I mean, it's there's that sweet spot, right? Where it's a nice neighborhood that someone can move up from a bad neighborhood into a nicer neighborhood, or someone in a nice neighborhood can move down from an expensive home into a less expensive home, but they're not willing to leave the nice neighborhood. So for me, that's all I have really. And I very intentionally targeted, and I've only pursued, I looked at a couple properties that are in less, what I would view as kind of less desirable neighborhoods, and I just don't want to go there, because of you have that dynamic where the ideal tenant for me is someone that aspires to move into this neighborhood, and they're trying to come to a neighborhood that they view as nice, and they're going to want to keep it that way, and they're going to want to fit in and be part of a nice neighborhood and what it takes to keep that neighborhood nice. Or someone that wants to stay in a nice neighborhood but might have a divorce or something like that they have to sell the house and then downgrade temporarily into a townhouse for a year or two until they're able to kind of bring their life back together and get back into a nice,
I would say that
home.
To have a buying criteria, a purchasing criteria set before you go into the market is probably a very smart idea. And it would be nice to say one shoe fits all, but I think you have to know your market a little bit. You have to know your price points. You have to know your areas, kind of the demographic in those areas of population and jobs. And there's a number of different things that you have to consider. I think most of the horror stories that come from owning rental real estate are usually based on people that don't have a buying criteria or have not followed that buying criteria. And it usually ends up not very beneficial on the back end, because again, like you said, if you're at too high of a price point and the market turns, different things happen at different areas, different price points, and different demographics. So that makes a lot of sense. So Ray, let's switch gears a little bit. I want to know what your philosophy is on property management with the units that you own.
Yeah, so I currently do not have a property manager. I handle it myself, and I think there's a scale level, and I don't know exactly where that is. For me, it's probably in the 6 to 8 range, where it would start to really make sense. Or we've thought about, and we haven't gotten comfortable enough to pull the trigger on buying, like an Airbnb at a beach location or a lake type location that we like. Obviously, then you would have to have someone local, and the phone calls would be exponentially higher for a nightly rental rather than a long-term rental. But with long-term rentals, kind of 5 and less, I just don't see the need. I mean, I get maybe every 3rd or 4th month, and normally it's an appliance isn't working quite right, and and then you just make the call, have someone try to fix it, or it's a 15-year-old refrigerator, let me take some measurements, I'll get you a new one, right? And that's it. I don't spend a whole lot of time thinking about it or worrying about it. I just replace whatever needs replaced and move on. But I don't need a manager to play middleman on that. And then as far as finding tenants and executing the lease, if that's within your temperament, sure. If it's not, get a property manager.
Yeah.
But for me, I've not had any issues, and the time has been, quite frankly, I've spent probably more time getting getting mortgages done, trying to get the mortgage done than anything else in
Right.
in the properties. But so once you get the mortgage done and you get the place bought, you throw up for rents, especially in this market. I hear there's bidding wars. I haven't
Yeah.
I haven't gone there and gotten a bidding war for
Yeah.
a rent rate, but the supply and demand nationwide is great for being a landlord.
Yeah.
And so I just don't see it.
Yeah. I think that there's probably a level of or a number of units that you get to that may be something that you consider. And that's probably with anyone, just because of the amount of time and span of geography that you're probably going to have to cover, unless everything's really close and local. But the likeliness of that is that it's going to get a little bit more spread out. So as you grow, do you anticipate eventually getting a property manager as you hit those higher unit numbers?
I actually, in my long-term vision, I more see myself as I get more units stepping back and away from my day job, and then I'll have it's like, I'll have all the time in the world is what I envision for a higher volume of calls. But at the same time, I couldn't take on a lot of more units and keep my day job. So
Right.
I could even see, I try to build up a handful more units over the next handful of years, have a property manager, and then when I quit, I fire my property manager and step in to incrementally improve that cash flow. And now that I have an extra 40 or so hours a week not being used by my day job, I can handle a few hours a week of phone calls and issues and maintenance.
You kind of already answered the question, I think, earlier, but so what would you say you spend on a weekly basis as far as hours on your properties currently?
Yeah. So normally 0, right?
Right. Okay. Yeah.
But it comes in spurts, and you get a like an HVAC type of an issue, and you might spend 3 or 4 hours, maybe even 5 or 6. I might have, and you have a tenant move out, and I'll need to go look at it, and I'll need to show, sometimes it'll take 3 and 4 people to show it before you get someone to sign a lease and get that down payment. So turnover and some real material work, a handful of hours, but I go months at a time with 0 hours.
Okay. So it's very passive, you would say.
Oh, incredibly. Yeah.
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 Cool. I love it. I love that it's created that passive income that really people are looking for. A lot of the times you take on another job by by owning real estate. It sounds like you've set it up so that it cash flows, it works for you, and it doesn't cause a lot of headaches. Ray, I don't want to take too much of your time, but I want to finish up on the question of what your next 5 years looks like. As far as real estate goes, do you have a unit count that you're trying to get to? Do you have a cash flow amount that you're trying to get to? What does the next 5 years look like?
Yeah, I've kind of have this goal, and it's been a goal from property number 1, that once I get 5 of them, or I get a couple of them paid for outright, kind of one for me, right? Which would be that beach house that I would Airbnb, and then I would go and for a couple weeks in the off season and really try to set it up that I can go for a couple months in retirement. But I hope to be fully retired from my day job in 5 years, and have 7 or 8 properties. I don't really have a hard and fast dollar or unit count. Just, as much as I can comfortably, take on, and hopefully not continue to not have a property manager, so that I can generate a little extra cash flow by taking on a few phone calls here and there. Not a big deal, but I hope to be retired in 5 years and enjoying being a landlord.
Yeah, I can see that. I think you'll get there based on how you've set it up and kind of how you're going about it. I think that that's definitely achievable. I think that that's definitely attainable. To close up, what final advice would you give to someone who hasn't started, who's looking to get started into rental real estate but hasn't done it yet? What advice would you give them?
To start, I think you just have to go out there and you have to try it. And even if you try it and you decide, wow, I'm really surprised at how badly I liked doing that, find someone else like Chad or I who like owning property, and if you're in my market, I'll buy it from you. I'll make you whole. We don't need any realtors. So
Yeah.
Just go out and do it. And it takes time. So the sooner you start, the better the outcome will be.
Yeah, I think that goes very well said. It does take time. I think that that's something that also prevents people from getting started, is, it's just going to take too much time. But again, I love the philosophy that in 5 years, you're going to be 5 years older anyway. And if you don't start today, then you're going to wish you had started 5 years ago in 5 years. So Ray, I really appreciate you being on the show today. Thank you for sharing your experience and your knowledge. What's the best way that people can get a hold of you if they have any questions or want to reach out to you personally?
Yeah, I mean, you could comment to Chad. Chad has my contact, but my email is just rsweger, rsweger @gmail, and be happy to take an email. And if it's something to jump on the phone, or look me up on LinkedIn, just find me on LinkedIn and reach out to me that way. Happy to connect, and if there's something you want to talk about, we'll connect.
Awesome. Thanks so much, Ray. Appreciate you having me on the show, and we'll talk to you next time.
Okay. Hey, thank you, Chad. Take care.
Well, there you have it. Thanks for joining me on another episode of the Maven Approach podcast. If you've benefited from something you've heard on this episode or any of our other episodes, please head on over to iTunes to leave a rating and review for the show. This helps us reach more people like yourself to elevate everyone around us. To learn more about Maven Capital Group and how you can be a part of our online community, follow us over on Instagram to stay up to date on all of our latest opportunities.